welcome everyone. Thanks for joining us for our webinar today. My name is Dawn LeBeau. I'm the Senior Program Officer here with Akiptan. We're a native CDFI. We're located in Eagle Butte, South Dakota on the Cheyenne River Reservation, and we serve folks in native agriculture nationwide. And today we're going to be doing a webinar on agriculture balance sheets. And we have my coworker, Sarah Puckett, in our loan team who's going to be leading the details. But we'll go ahead and start with some introductions of our products and services here at Akiptan. And then we will go through the balance sheets with Sarah. And you all are welcome to use the chat for questions. You can use the Q&A box as well. We'll be monitoring that throughout the webinar today. So if you have a question in real time, please go ahead and place it in either of the chat box and I will make sure that it's answered in real time. However, we are leaving space at the end for questions that you might have towards the end of the webinar. Okay, so our mission here at Akiptan is to transform native agriculture by delivering creative capital, leading paradigm changes, and enhancing producer prosperity across Indian country. Akiptan is the Lakota word for working together in a cooperative effort, and it's reflected in our lending philosophy. While CDFIs are like banks in the sense that we provide lending, you cannot deposit money into our institution. We also do a lot of TA or technical assistance with the lending that we offer, and that can come in the form of business and goal planning, succession planning, financial literacy training, and any other resources that our producers need so that they can be successful in their operations. There are laws that we have to follow, but because we are unregulated, this allows us to be flexible and innovative with our lending models, our TA, and our initiatives. Okay, so we have been lending since 2019. Since that date, we have reached 29 tribal nations. We've deployed 40 million in loan capital across Indian country agriculture. And we have completed 567 loans. So hats off to our loan team for all of that hard work. I'll go over our products and services. I do see something in the chat. Just want to check it. Okay, it's just a note. So we provide a variety of loans, and that includes a youth loan, a general loan, an operating loan and line of credit, and then a land mortgage and down payment assistance. And with each of these products, technical assistance and financial knowledge is offered. With those eligibility around applying for our products and services simply says that you must be involved in the native agriculture field. So it's anything on the food chain from initial production onto retail. That can include farming, ranching, fishing, timber, and retail. And we also say if you have a wild idea and you think it would fit within this eligibility, please bring that to our loan team and we will look at it and figure out where it could fit within the eligible activities. And so we'll go through each of these one by one, just briefly. Of course, all of this is on our website, and so you can see it there. But we started with our youth loan. It was one of the first loans that we started with, and so we firmly believe that investing in the next generation is that step in food security and food sovereignty. So we have our youth loan, which has 3 categories, and you can see them here. Ages 10 to 12 can apply for up to 5,000, 13 to 15 up to 7,500, and ages 16 to 18, $10,000. So this product works well with 4-H animals. It can be used for any type of native ag business, and it can be paired with a FSA loan. And this one has up to 12 years of repayment. And we'll go through what our 2 repayment option styles look like here in a minute. This, of course, is paired with our financial literacy, which is that TA. We have a curriculum around this. It's available on our website. Our general loan It's the loan that we have to fill all the gaps that producers might have at their operation. Eligibility is that you must be 18 years of age. This one has a 12 years of repayment option, and you can apply for up to $250,000. So this one can be used for equipment, infrastructure, value-added operations, transportation, and livestock. This too is paired with our technical assistance and our rancher-specific financial literacy. As for our operating and line of credit, we know that many producers have short-term needs, and this is here to help fill that gap. This can be paired with our general loan for that full circle servicing. Eligibility again includes being 18 years or older. There's a 12-month repayment term on this. You can apply for up to $250,000. With all of our products, of course, this one comes with the TA so that we make sure that the producers are set up for success. Okay, and we have our land mortgage down payment assistance. We know that land is a complex issue across Indian country. We're ready to help solve that access to land issue with this product. You must be 18 years of age. This one has that 30 years of repayment option on it, and you can apply for up to $250,000 with this one. It can be used for consolidating interest, purchasing a piece of land to operate on, or purchasing a land and building combo. Once again, this is paired with TA, but Akiptan is familiar with working in Indian country, and we know the importance of land access and ownership. And so because we are familiar with the area, we understand those highly fractionated issues, and we are ready and eager to help consolidate those interests and offer a product for this. Okay, so those are our lending models, or our lending products, excuse me. Let's go over our repayment styles. And if you guys have any questions, or maybe you're familiar with all of this, you're welcome to put your questions in the chat. Okay, so like I mentioned, we have our two different unique repayment styles, and they go hand in hand with our patient capital lending philosophy. And that patient capital lending philosophy basically means that it's partnership based. We offer longer terms, lower interest rates based on our models. So I'll go through these briefly, but our traditional repayment option is a blended repayment from the start. You'll see longer terms than what you would see at a typical lending institution, and it's great for equipment, infrastructure, and people who are already at their maximum capacity. And we'll look at a example here. You see this is a 7-year note here. You can see your annual loan payment, your principal paid, and your interest paid. So like I said, this is one you would typically see at a bank, but the interest rate and things and the term rate would vary. Okay. And this is our most unique product here. It's our interest-only repayment option. So you have 5 years of interest-only payments. And after that 5 years, it then switches to the principal and interest payments. It's our most unique and innovative. It's what allows our producers to reinvest their profits back into their operation. And this has been designed to help our producers grow their balance sheet. It's great for livestock and people who want to have that large upfront growth capacity. And we'll look at another example here. Okay, and you can see how the note is scheduled out for 5 years, and this is the interest-only period here, the annual payment. And these are just examples, but this one has this $13,000 payment here. And then you'll see after that 5 years, it then moves to that blended for the remainder 7 years. And you can see how much they would be able to reinvest into their operation here. But these are all on our website, and you're welcome to review them. You can also reach out to us and we can go over these things and pieces individually. Okay, I think the last thing that I want to go over before passing it to Sarah is our loan process. We start with discovery and intake, where you fill out our intake form. That goes to our loan administrator, Stevie, and she'll get you started with those. Once that's done, you move to technical assistance and the application completion. If that is approved, you would move to review and closing. However, if it is denied, we don't do just kind of like a one and done situation. We want the applicant to understand why it was denied and what steps can we take to get them to a yes with that application. So we try to make that very clear and to be very partnership based and helpful. However, if it is approved, you move to review and closing, and this is where all of the forms are signed and sent off, and then you can from there submit your invoices to get your money dispersed back to you so you can pay for things. And then the fourth step is our aftercare. So, like I mentioned, with all of the products, we have our technical assistance, and this includes one quarterly check-in every quarter, and it's very informal. We just want to make sure that you have all the support you need, that you're following your business plan, and if there's any resources that come across our desk, we want to make sure that you have access to those. So it's very partnership based in the aftercare portion. Okay, so with all of that, I will go ahead and pass it over to Sarah so we can get started on the webinar for balance sheets today. Thanks, guys.
Hi, everybody. I know Dawn briefly introduced me previously, but I'm Sarah Puckett. I'm a loan officer with Akiptan here. And Dawn did a phenomenal job of giving like a backstory on our lending and what we can do. But this is kind of diving into specifics of your financials. Today's webinar is over the balance sheet. So on a scale of 1 to 5, if you guys can just type in the chat, how would you rate your knowledge of a balance sheet? 1 being limited, and then up to 5 being an expert. You don't need to be on this webinar at all, and you can teach it yourself. A lot of middle of the road answers, 2s, 3s. That's good to see. Awesome. It looks like everyone's pretty middle of the road, which is great. So then you have a kind of a basic understanding of what a balance sheet does for you in general, but we're going to dive into all of it. If you haven't chatted it yet, you can continue to keep filling the chat box with those answers there. So the purpose of a balance sheet is to show what an operation owes, which is their liabilities, and what they own, which is their assets. And that's for a specific date and time. So the balance sheet statement looks at 3 points in time, which is your current as of now, your intermediate, which is in the future but not too far in the future, and your long term, which is far out in the future for your operation. So overall, the balance sheet shows the amount of equity that a person or business has. And usually the balance sheet shows both side by side, which is your business assets and your personal, and that kind of makes up the whole thing. And then each side must equal the other. So your assets in total must equal your liabilities. And if they don't, whatever the difference is called your equity. Yeah, there we go, Dawn. Sorry, I didn't know if you wanted me to tell you when to switch or if you were just going to do that. So your asset schedule is the very first like building block of setting up your balance sheet. So the assets are usually divided into 3 categories on your balance sheet, which again is your current, which is what you have right now and can be liquidated. So there are things that have a life of less than 1 year. Current assets are things that can be quickly turned into cash if they are not cash already. This does not include breeding livestock, but can include feeder livestock, calves, and crops, because those are going to be leaving your operation and providing you income within this fiscal year. And examples are inventory, crops, market livestock, accounts receivable, things like checking accounts on hand, etc. The next step is intermediate assets. Like we said, maybe not current right now, but not too far in the future, they could be liquid. So these are things that have a lifespan of 1 to 10 years. On-farm examples of this can be breeding livestock, machinery, and equipment. And then off-farm examples of this, which would be personal, would be retirement accounts, household goods, and cash value life insurances. Depending on where you are in life, retirement accounts and cash value life insurances for our younger producers might be a long-term type thing. So, and then long-term assets are far in the future and things that are hard to liquidate. So these are things that have a lifespan of 10 or more years and are more permanent, such as infrastructure and land. So these are things that are going to essentially be around the entire life of the operation, hopefully. And if you guys, again, have any questions, just put them in the chat. We'll be monitoring that the whole time. If you need us to go back on a sheet or anything like that, just let us know. Then here's 2 kind of visual examples of the asset schedule. The one on the left is going to be the business one. So this is where you would list out anything that's related to your ranch operation. The examples they have there are like a ranch checking account and then hay and crops on hand, market livestock, which would be calves that are yet to be sold this year, vehicles, equipment, and breeding stock. And so essentially what you do is you list out the quantity of each item. So for, let's say, the heifers, the quantity would be, if you have 20 that you kept back last year, the quantity would be 20. The value would be whatever you have them valued at or whatever your banker values them at. I think right now it's like 3,000 because the market is so crazy. So the quantity would be 20, value would be 3,000, and the worth would be the total of that. And I'm not gonna lie, I don't have that math out in my head right now. So whatever 20 times 3,000 is, that would be the worth of the asset as a whole. And then the next, the right-hand image is just going to be the non-ranch farm or the personal side of the balance sheet. And it's the exact same thing. It's just things that aren't necessarily under the ranch. It would be you personally. All right, so then the next section we're going to look at is the just kind of like an example of the asset schedule. So as I said on the quantity, if you're going through machinery, it's usually just one. So you have one New Holland tractor. The value is 25,000, and so the worth is 25,000. So then again, on things like cattle, you're going to have multiple quantities, so that's where the value and the worth are different. So on this example, there's 150 Black Angus cows, and that's going to be at a value of 1,200 each. And so the total herd worth then is 180,000. So that's how you're getting that. All right, same thing with the bulls. There's 8 of them, so the value each is going to be 4,000, but then the herd value of your bulls is 12,000 total because it'll be that 4,000 times that 8. And so then that gives you a total asset value of current asset value, or no, is this intermediate? This is intermediate. So total intermediate assets on this example schedule of $217,000. All right, so that's the asset side of your balance sheet. The next part that has to, that's the next building block of the balance sheet would be the liabilities schedule. So, like assets, liabilities are also divided into the 3 categories of current, intermediate, and long term. So, current liabilities are things that will be paid off in less than 1 year. So, examples are lines of credit at the local co op or bank, or your just general operating note. The intermediate liabilities are things that will be paid off in 1 to 10 years, such as equipment, livestock, or vehicle loans. And then long-term liabilities are things that will be paid off in 10 or more years, such as a land mortgage or a large building purchase. So essentially, if you can kind of see the similarities here, your current liabilities are most likely going to tie to current assets. Your intermediate liabilities are most likely going to tie to intermediate assets, and then long-term liabilities to long-term assets. So that's kind of a comparison there on those. All right, and then your liability schedule does look a little bit different as far as the setup from an asset schedule. So you're going to have where the liability is. So FSA, your bank with us at Akiptan or somewhere else. You're going to have the principal balance, the current payment, so what your payment is each year and or each month, the due date, whether it's annual, monthly, or another setup, if it's something like a quarterly payment, we've seen that before, the interest rate, and then the remaining balance after your payment each year to kind of give you a gauge of what your next year is going to look like. And so this also has on farm and then off farm, which is personal. So anything that you have as far as like a cattle loan, a land loan, equipment loans, those are going to be up and on farm. And then like your personal credit card, that's going to be down and off farm. All right, and then here's the same thing that we did on the assets, just for the liabilities, looking at just kind of example. This is a full balance sheet put together, but we'll just look at the liabilities section first. So the current portion due, whatever your current payments are for each liability, that's going to show up in your current liabilities. Whatever your remaining principal balance is on all of your loans is going to be, except for long term, sorry, except for like real estate and large buildings. Those are going to be the intermediate liabilities. So if you have, for example, this one says a $75,000 loan at FSA. Let's just say it's for cows. So your $20,000 payment that's due this year is going to be represented in that current portion at FSA. The 55,000 that's left over after that payment is made is going to be an intermediate liability. And it's an intermediate liability, not a long term, because it's for cattle and it's going to be paid off in most likely less than 10 years. Any questions on that? I don't see anything in the chat, so we should be good to go. Again, if you have questions, just put them in there and we'll cover them. So then once you have your liability schedule kind of built out, you stick them together, asset schedule and liability schedule, you stick those together and they mesh up and form the actual balance sheet. Um, and then anything, we mentioned equity earlier, assets and liabilities have to essentially equal each other. And how we do that is we have equity. So on this example here, the total assets of current, intermediate, and long term for both personal and on farm is 222,100. The total liabilities for on and off farm, current, intermediate, and long term is 110,500. So those currently don't match. The way that we do match those up is that there's equity of $111,600 added to liabilities. And that equity is the amount of ownership you have of your assets over your liabilities. So of their $222,100 of assets, they technically have ownership over 111,600. Any questions on that? All right. And then we do have an online Excel balance sheet, which we're going to kind of dive into and do an example on now. And that's on the QR code there. It's online resource for anyone to download. And then we also have the Rancher worksheet. Rancher, what's
Renter
the name of the
workbook.
booklet? I'm so sorry.
It's a workbook,
The
yeah.
Rancher, yeah, the workbook that kind of has all of your yearly stuff in it. That's the second QR code there. But the first one is generally when we have a producer who doesn't have a balance sheet prepared by someone like FSA or their primary bank to send in for us when we start the loan process. This is what we'll send out to them to kind of get them started and get them going on building their balance sheet. So this is what we send out. It's very, it's not super pretty, it's functional. And so it doesn't have a lot of fluff going on here. The first sheet that comes with it is the balance sheet basics instructional sheet. So again, it just kind of breaks down what we've already gone over as to what are assets, what are liabilities, and then current, intermediate, and long-term on each of those. And then the bottom section of the instruction sheet has kind of an example like what we went over of the New Holland tractor, what it's worth, what its value is, what it's worth, the herd, what their quantity is, their value, their worth, things like that. So now that we've already gone over all that, the instructions hopefully will just help you in the future if you do this. But the second section is the balance sheet. Because the asset schedule and the liability schedule are kind of what builds your balance sheet, we're going to leave that one be for now. Don't try and build that off the kind of the get-go there. I would start with the asset schedule. And you're going to essentially fill out for your operation what you have on there. Does anyone have any examples? You guys can shout them out, or I can just kind of make some up as to things that you would like to see listed on here. If you have any questions on how to list things, I can absolutely show you that currently. Nothing in the chat. Okay. So an easy one would be one checking account at your bank. Let's say you have $14,000 left in there. So that'd be 14,000 over on the worth. It'll total up that cash and cash equivalents on there for you. Where would you put packaged beef that is ready for sale but in your freezer still? Ooh, that's a good question. So that I actually have never run into this before. I don't want to say it's crop inventory, but it would be similar. So in that case, it would be like meat inventory, I would assume. Justine, I see you just putting questions our way. I don't, I mean, it is technically market livestock, but it's no longer livestock at that point. I would probably change or add like a section of meat inventory if you are someone who does retail cut sales.
And you can change the headers like you just said, right? Like if,
Yeah, so if you don't,
yeah.
yep, if you don't have crops, that's a great point, Dawn. You can just change it to meat. And you can say like packaged cuts. I don't know what you have it as, Justine. And then if you have like 50 packaged cuts, then what you think the total value is, you can do it kind of like that.
There's
Fat cattle.
another question in
Oops,
there,
sorry,
Sarah,
what's that?
if we can pause. Um, I think you mentioned this already, but when do you do the balance sheet and go through this process is the question.
Anytime, all year, always. Yeah, I mean, you can update it anytime. I would say at minimum, update it when you purchase a new asset or you gain new debt would be like the minimum I would say on updating this. But yeah, creating one, you don't have to necessarily be applying for credit to create one. It's always just kind of a nice um, gauge of your business. Let me know if that did or did not answer your question. I can kind of go further into it. But yeah, at minimum, if you buy something like a new tractor, definitely add it to your asset schedule. And if you did buy that new tractor via obtaining debt, then also add that to your liability schedule and just make sure everything is balanced out that way.
I do have a question, Sarah. So, let's say one of the producers is getting ready to apply for a loan. What are some things that maybe they have it all ready to go and they think that they've put everything on there, but what are some things that you often see like, oh, that should have gone on there, let's add that?
Say the two main things that we see either not represented or misrepresented are on the personal, like the non-ranch farm section here. So one where it says retirement, and then the second where it says cash life insurance policy. Those are the two that I think we usually get the most questions on. So retirement, if you have something like a 401k or a Roth, definitely put that down because that is obviously an asset that's not going to go anywhere. There's no stipulations on it. It's just cash that you have access to. Whether you have access to it yet is questionable, but it is still in your name for sure. The cash value life insurance policy is one that we see added a lot, not necessarily correctly. So a lot of times we'll see folks add that they have like a $100,000 life insurance policy, but it's a term policy. We can't use those because that obviously comes with the stipulation of death. But the whole life insurance policies that have like a cash value, those you can list the cash value of, not necessarily the redeeming value, but just the cash value would be the main one that we see that we have to correct a couple times. I think Angie had another question in the chat there. To account for the checking account balances or other balances, or is it mainly for loan purposes? Generally at the end of year, that's when we see a lot of folks kind of getting all their stuff together for taxes anyways. So they're just going to update that as they go through. But again, even if you don't get to it at end of year, you can do it at the very beginning of the year to update for the new fiscal year. Honestly, there anytime. You can't update it too much. Um, I mean, maybe every day would be a little tedious to do, but it's not like there's like a set time of like you have to do it now. It's just I would say best practices again when you buy something, when you add new debt, or when you're trying to obtain a loan or like do your tax type stuff is the easiest times of year to do it. Any other questions that we missed? Um,
One more just came in.
Horses. Okay, so horses are always a hot topic. Um, if it's up to your discretion necessarily. If you if you're ranching on them, if you're using them for the ranch, if they're contributing to your operation, then you can put them on farm under usually we just do other. I'm going to be honest with you. We put them under other because they're not necessarily breeding stock unless you have like a horse breeding program. Then it's I'm just touching on that, Justine. If you are breeding and raising them for income for your operation, you can put them under raised breeding stock. If they're just ranch horses that you work on, um, we generally just place them under other because they're a little hard to categorize. Or if you have something like a hay operation, yes, Sarah, you can have both. You can have the horses that are just doing their own thing, and you can have your breeding herd, and you can absolutely separate those. Um, but if you have like a hay operation that doesn't necessarily need horses to do anything, but you just have hobby horses as well, you can list those under non-ranch and farm other. So it's completely kind of up to you and how you feel your horses are either beneficial or separate from your operation. Okay, Sarah, I also had a question about structuring the things that go into taking care of the horses, feed, vet, etc. If you have a large cattle operation, usually the couple bales of hay for your this is not for a breeding program with many, many, many horses. This is for your average Joe who has like 4 ranch horses that he feeds as well. That's going to be a small enough expense that it's most likely just going to tie into his cattle feed. If he's buying 6 trucks of hay and the horses are eating 4 bales, he's not necessarily going to schedule or like separate that out. So they can just stay kind of estimated as inside of that cattle cost. If you have 20 cows and 100 horses, I would separate that out. And that might just be like a cash flow thing, which is our next week webinar. So absolutely log on to that one as well. Um, but yeah. No other questions for me? Okay, so that's the asset schedule on the balance sheet template that we send out. The next one is the liability schedule. This one, again, looks just like the example we had. And then it just lets you fill out what you have personally. If you have a cattle loan through FSA for 50,000 and your current payment is 12,000 a year, the due date, usually they're due like December 1st every year. Um, Usually they're annual, and the interest rate, if you if you bought these many, many, many years ago, it might be in the 2s or 3s. Right now, I think they're like 4.5, I'm not sure. So that's just kind of how you fill this section out. And the notes could be whether it's cattle or equipment, just so you kind of know what it's going towards. Things like credit cards, you can list on off farm if it's just like a personal credit card. Whatever the current balance is, let's say it has a $3,000 balance. The way, if you are operating off of like yearly cattle income, then we're most likely, and this is just for us because we roll off of annual stuff, you're most likely going to take your monthly payment and times it by 12. So if you have a $50 a month payment, the entire year you would have at least a $600 payment. And then you would just put, let's say you pay the first of every month. You can just put first or however the note is that you want to put it in.
And
And it's due
Sarah,
monthly.
there's a question
Yes.
in the chat too asking what if you lease sheep or goats for a couple of weeks or months to help manage the crops and grass?
So if you're leasing, so in that case, you're leasing the service in situations like that, not necessarily leasing the animal itself. It's like you're not gaining a lamb or a kid from any of those. So in that case, nothing changes on your um asset schedule. They're not owned by you or like a lease to own situation. So your asset schedule is not changing and your liabilities aren't necessarily changing either because that is an expense, but it's not debt. Um, so that would just go on your cash flow essentially as just an expense. All right. But yeah, as far as like the liabilities sheet here, and then you just list out what you have essentially. These will tally up themselves, the totals of all of your liabilities. And then once that is completely filled out by itself, um, we will go back to the balance sheet and that should have been filling itself out as we go along as well. So lots less for you to do because it just kind of self-populates there. Um, and it will show you kind of how everything looks. Any questions on the template that we sent out? or that we send out to our producers if they don't already have a balance sheet. Again,
Mm.
balance sheets, and then like the asset and liability schedules that go with them don't always look exactly the same, but their basic workings are going to be the same on all of them. They're going to tell you the same information. I don't think we have a slide for this, but if you guys want to pop back in the chat and just give us a 1 through 5 on how you're feeling about balance sheets now, feel free to do that. We love the instant feedback. And then Dawn, I think everyone's done listening to me talk. So back to you on the rest of it.
Make sure I'm off mute. Yep. Thanks, Sarah. I'll go back to the first slide. Gonna kind of just use that same tally. Sorry, I don't mean to make anyone dizzy here, but all right. So if your knowledge has increased based on Sarah's wonderful explanation of everything and then doing the actual example, if you could type in the chat how you feel about it now with some 4s and 5s in there. I didn't see those at the start. That's promising. Good to see that. I'm going to go ahead and jump ahead again. Thank you guys. Okay, so I did put in the chat the link to the forms that we use that are free on our website. So that's in the chat, but you can also scan this QR code here and it'll take you right to it. And then we have that cattle rancher curriculum. And on pages 29 through 34, we're talking all about balance sheets in the booklet. So there's more context, more examples, and you can scan this code here too. But I did put that in the chat. You can jump on our website and grab both of these resources. You have a nice comment in the chat too. It says this was very easy to understand, but I will need a refresher. So this recording is going to be on the website to everybody. So you're welcome to reference it once it's up on the website. All right. With that said, thank you so much, Sarah. You're a whiz and a pro at all of these, so we appreciate you taking the time and explaining all of the pieces to everybody. There is one more question, and I don't want to jump ahead of it. If you have supplies on hand, does that belong on a balance sheet?
I want to say yes, depending on the supplies. But yes. So like, let's say you went out and bought $5,000 worth of fencing supplies. I would say yes, that would be under current assets. You can just add a header, like how we changed crop inventory to meat inventory. You could find if you don't want to list it under something else and you want to know exactly where it is, you can do supplies on hand, and then you can list out, 2 pallets of wire, 400 posts, whatever you want on that. As soon as they go on the ground, unfortunately, it's not necessarily still an asset unless you try and do um like infrastructure, depending on how you work it. You could move it once it's built into like an intermediate infrastructure asset. But it obviously then needs to be depreciated as it kind of gets used and breaks down.
Okay, there's a follow-up in there too, Sarah.
Boxes
Um,
for berries. I'm not familiar with berry farming, produce farming very much. Um, if they're worth a significant amount to you and your business, I would say yes. It does. I mean, especially if you're trying to gain credit at a lending institution in the future, $500 of berry boxes might mean the difference in, like, like a healthy percentage on some of your ratios versus being like in the yellow. So, I mean, $500 doesn't seem like a lot, but for startup businesses, it can really tip the equity in your favor.
there's some nice back and forth going on in the chat. Justina's adding that's a good question. And we have boxes for our meat too, and we put them under assets. Okay, we could just sit for a moment, and if anyone has any more comments or questions, please go ahead and continue to use the chat. And as you do that, I'm going to work through the last few of the slides, but I will pause to make sure that any questions or comments are read. Okay, so these are the curriculums that we've been mentioning throughout the webinar. This is the financial management guide for cattle ranchers. And on page 29 through 34, you're going to see some more context around balance sheets and some examples. This is available on our website, so you can download the PDF version. However, if you would like a physical copy of this, please put your hand up in the chat or just write, I would like one, and we can mail one directly to you so that you can work on it, pen to paper type of situation. But that's our curriculum around cattle ranchers. Then we have our introducing native agriculture, a guide for young entrepreneurs. This is the one that our youth will go through if they apply for lending with us, but this is also the one that we use in our youth internship program. And this is helping them to see the history of native agriculture, to visioning what they see in their communities and then working on cash flow sheets and balance sheets at a younger age so that way they have that information. And then lastly, we have our third curriculum. This is financial management for native agribusinesses. So your value added products, your trucking, your farmers markets, things like that. And this goes over a lot of marketing for your products. And again, financials are included in this. So you all are welcome to check these out online. I do see the notes for those that would like the curriculum. So I'll make note of that and we'll get those out to you. Okay, so all three of those are on our website. However, we do have additional resources. We have our succession planning guide that's on our website. You can also request this. This is to help producers to plan for the future of your operation. Whether you will be handing it down to a family member, one of your extended relatives, or somebody in your community. This lists a 3 or 4 step guide to how to make that a reality and be prepared. And then we have our rancher record keeping booklet, and it's an annual booklet, so you can keep track of things month to month, and then also keep all your records in one nice book that you can keep in your vehicle and just jot things down in there. So we're welcome to mail these or welcome you all to let us know if you would like a copy of one of these as well. But again, these are on our website. You can scan the code here and you can type the information into if you'd like the PDF version. Okay. And we have additional webinars and resources on our website. So as Sarah said, we have our cash flow sheet webinar happening next week, and it's a good webinar to go side by side by the balance sheet webinar here today. So you can get signed up for that on our website. It's at 12 p.m. on the 18th. So we'll be doing kind of a similar style and structure where you can ask questions and see things moving around in real time and also get the resources. And then following that, the very next week is our ag growth and trends for your cattle operations on the 25th. And these are all led by Sarah. So you're welcome to sign up for these and join us again. And then in December, we'll close out our webinars for the year by hearing from an agriculture producer who's doing their own ag marketing and operations. So that's on December 17th from 12 to 1 p.m. Mountain Standard Time. Okay. And as I mentioned before, all of our recordings are on our website. And so you can watch our recordings that go all the way back to when we started them. And we started out with balance sheets and cash flow sheets when we began. We always do an update on Akiptan every year. We also have general tax information webinars that we recently did with Mr. Rob Holcomb. So please check those out. And then our free financial information on our website, which includes the cash flow sheet, the balance sheet, the growth and trend chart. We also have business plan templates on our website as well. So you can scan this code, but you can just go to akiptan.org as well. Okay, so I'm going to pause because I do see quite a few things in the chat. Yep, I'm taking note of everyone that would like a curriculum. Sarah's asking if we have any information specific to a buffalo operation. A lot of the folks that are doing a buffalo operation use the cattle rancher one, and then they make amendments to it based on their operation. So that can be utilized for that operation, Sarah. Okay. All right. I don't think I skimmed over anything or missed anything, but the last couple slides, this one here, you're welcome to sign up for our newsletter. So we do an e-newsletter to your email, and this is where you can get all of the things that we are doing here at Akiptan, and that includes talking about what our employees do, all of our youth programming, like our Oki Chinese scholarship that we offer every year, our youth business plan contest, our three pillars approach here at Akiptan, our patient capital lending model, and then other resources that we see that producers should have access to and information on. So you're welcome to sign up for this by scanning the code here, but it's also on our website. Okay, and last but not least, we like to hear from you guys, and we want to know what kind of content do producers need to hear about their operation. So, for example, a lot of folks wanted information on the cattle market, and so we've incorporated a webinar about the cattle market every year so that folks have information in real time about what that looks like. And so if you would take a moment to scan this code and fill out our feedback survey, we want to know how well we are doing as well and what kind of other topics that you would like to hear about because we want you guys to be successful in your operations and we want to get you the knowledge that you need. So please go ahead and fill this out when you have a moment. I'll leave it up here for a second and I will also go and grab the link so you can just click on it in real time. Okay. And if you fill out our form, we like to offer just a little incentive. We draw a name for whoever filled it out and we send out a bunch of cool Akiptan swag, and that can include like a tote or a hat or organization tools for your operation. So yeah, if you fill the survey out by next Wednesday. We'll draw for names, and whoever gets drawn gets to win a nice little goodie bag from us. Okay, and with that, that concludes our webinar here today. Sarah, is there anything else that you would like to offer before we close out here?
No, I don't think so. Thank you guys all so much for your amazing interaction and questions today. It's always way easier to do these when we have those questions rolling in. And then again, the cash flow webinar next week it goes really well hand in hand with this week, so I hope to see you all there.
Cool. Thanks, Sarah. Here's our contact information if you ever need to get a hold of us. There's our phone number and our email address, and our location, of course. But thank you all again for being with us today and hope to see you on the next webinar next week. Have a good day.